sessions are going to be more of a weekend wrap up, more on the fly than say the Tuesday sessions where I normally prepare quite a bit of information for you guys. This one's going to be kind of just the little nuggets we picked up on over the weekend. What's going on? What's moving markets? Let me pull up the chat here just so I can have this. Hey, oh my goodness, Mike ran half a marathon yesterday. I'm guessing finished in 2
2
hours.
hours and 14 minutes?
Nice. That's amazing. I've never run a marathon. I've never ran half a marathon.
Same. I could get a half marathon done in like 2 days, 14 hours, but
Yeah.
definitely not 2 hours, 14 minutes.
Mike, you're killing it.
That's impressive. Hey, Victor, how are you? Got an interesting open today. I mean, it seems like it's green, but kind of shaky green across the board. With I think battling headlines, some of the big names getting up way ahead of the skis. I mean, I think Apple opened 5.5%, pulled back just a bit. Tesla was really ripping, then dropped $10. So I think this is one of those opens that's trying to figure out is this real, or are we just kind of getting an overinflated reaction that we need to scale back out of the rest of the day.
And if you guys paid attention over the weekend, there was quite a few different headlines. Does anyone remember last week when the markets popped crazy at like 10 a.m. on Monday morning, I think?
You mean Wednesday, the 10% one, or
No,
the
no, no.
the pre-fake news?
The
That
pre-fake news.
Yeah.
Monday, here's Monday morning. A rocket shot on the NASDAQ, and then it flushed out. There was a rumor that tariff pauses were coming, and then it turned out that the rumor was fake. So it all
Yeah.
sold off. And then 2 days later, fast forward here, we in fact got that same exact news that it was real, popped big. Now, over the weekend, we had news. We can't see the markets because they were closed, but that there were tariff exemptions on semiconductors and smartphones. And then that turned out to be fake. And here you can see the futures market. This is the NASDAQ futures market. So the tech stocks opened way up here last night, 6 p.m., and then immediately flushed out. Very similar to what we're seeing today. Opened right where it opened on the futures market last night and then flushed out so far. So we'll see. It rebuilt strength overnight. But I'm personally very curious. Obviously, nobody has any clue what's actually really going on here. Kind of been mixed messaging. But I am wondering if it's a similar scenario to what we saw the other day where the news got leaked and then they had to shut it down and say, nope, that's not true. And then the real news got announced. So we'll see. Trump says that they will be rolling out the semiconductor tariff decisions over this week. So we'll see what happens there. Obviously, there's a lot going on in the markets. There's still inflation, but that's not like even taking up a major headline right now, which is crazy to me because that's a big deal. That's a really, really big deal. But everybody's hyper focused on these tariffs, and it makes it pretty unpredictable in these markets to trade them. There's not a lot of great trends. It's just volatility, as you guys know. I mean, just look at how big these bars have been. So with that said, I've got a few little nuggets for you guys to keep an eye on today. One thing that's interesting, and we'll see if it fills the gap to the downside. But Apple, obviously, on the smartphone news or even the rumor now, popped really nicely this morning. It was up, I think, 9% when it first opened this morning, and it's now up 4.5%. So Apple obviously would be one of the biggest benefactors of the news if it's positive for them. If it's not positive, I think we'll flush right back down to here. However, I have to imagine that this rumor isn't all just 100% a rumor, but we'll see. As for a few nuggets for you guys this morning, I'm just going to give you guys kind of the headlines I saw. Obviously, this is just what I just talked about, the tariff news. It said there was exemption on smartphones and semiconductors. Then they said there's not. Uh, just need some clarification this week. Trump also was hinting at future tax cuts, which would be great. Again, I said that my expectation going into this tariff news was sure we might start off with tariffs, but I imagined pretty quickly we'd be talking tax cuts. We haven't had any talk of that yet, and it's been a little bit delayed, in my opinion. The reason that tax cuts are important is because tariffs do increase the cost of goods for the consumers in the U.S. for the time being, so you can offset that by giving them a tax break, give them a little more money in their account, so they're not, paying more for everything and still paying as much for taxes. So if that comes, that could be very bullish for us as well. Again, Apple's one of the big headline news stocks right now, and same for Nvidia, which is just slightly up today. Let's see, it's up 1.7% now. I would not have been shocked if the news was real that the semiconductors were exempt, that Nvidia would have been up 4 or 5% today. But now it's just again waffling kind of there. What's going on? So don't forget here, those are two stocks to pay attention to. But if we do get positive news and we get some optimism back here in the markets, that means that there will be increased spending capex, and that goes to all the companies that supply AI. One of my favorites is GEV, who is one of the front runners on the SMRs, which is going to be the nuclear reactors to help power all the infrastructure behind AI. Jensen Huang, Huang, how do you say it?
Don't ask me.
NVIDIA CEO announced this morning that they're going to be doubling down on AI infrastructure, energy, all that good news. So, in my opinion, that's a good positive news for a stock like GEV. As you can see, just like most stocks, it's been in a downtrend. But here, this green line is the 200-day moving average. Blue line is the 50-day moving average. Every Tuesday, I cover, hey, where are stocks at in relation to their 50-day moving average, in relation to their 200-day moving average? Over the last week or two, we've seen almost every stock below their 200-day moving average, which also means they're most likely below their 50-day moving average. So most stocks like Nvidia here are down well below both. Apple below both. GEV's actually been holding up surprisingly well, and I think that's because it's going to be a front runner once we get out of all this tariff news and headlines. So that's definitely a stock that I have in my portfolio, that I've just been trying to slowly accumulate. Again, I don't want to put all my eggs in one basket here, but I do think this could be a big, big winner for folks who are looking to invest in the long term. As for a hedge play, and I put it in quotes because it's not when you say hedge, if you ask any advisor or financial institution, give me some hedge plays, they would tell you bonds, gold. I don't know what else are big ones. Those are the two main ones. But a stock I like as a sort of hedge play or a counter play when there's high concern or high volatility is the insurance stocks. Tell you about it all the time. Progressive made a beautiful bounce off the 200-day moving average. You see it just touched it there, and it's been going higher ever since. If you look at this morning's market open, let me just pull it up here. I actually haven't looked at it since right at the open, but we'll see if it still lines up with my theory. So if I go here and you see it's normally counter market. So when tech goes down, you can barely see it, but insurance goes up. It acts almost as like a hedge play or a safety play. Obviously, Nvidia chip stocks are going to be your more speculative plays. I wish this wasn't zooming out the whole way. So when Nvidia, Apple sell off, typically you'll see money sneaking into these insurance stocks, which are going to be your safer plays. Because again, people pay their insurance bills week after week, month after month, no matter if we're in a good time or bad time. Now, people might have less cars in a recession than they would in a good time of expansion. But that said, the insurance companies are basically just collecting checks all day, every day. And as long as there's no crazy natural disaster, they're good. And even so, they're so good at pricing out premiums. Like even when we saw the California wildfires the other month, which were just obviously horrible, a lot of these stocks weren't even at risk. Progressive had already taken themselves out of that risk market. So they're very good at taking themselves out of high risk markets and just staying with the safe plays that they know they can collect premiums on and make money on over time. So that looks like a beautiful play right now. If we can see here again, bouncing off the 200-day moving average, moving higher. It looks like it could go back to 290 easily. In fact, let's go ahead and take a look at Apex here. See what Apex is telling us. I'm not sure. I haven't actually checked it this morning. So again, we do this kind of on the fly on Monday mornings just to see what's going on. Apex is still in an active buy signal. It almost got stopped out. It did not get stopped out. So Apex has the profit target here. And I'm not sure why it's not showing up. Maybe my screen's not big enough. Well, this is a little bit concerning. Why is my... Let me try and see. Oh, maybe it did get stopped out. Okay. That's why the profit target's not showing. It must have just touched the lower level here to stop out. With that said, the previous profit target was up here at 296 on Progressive. Man, I keep squeezing my screens and unsqueezing them. 296 on Progressive, which is right around that number I just gave you, 290. 296 would be all-time high. So if I'm trading Progressive right now, which I am, I would want to be setting my first profit target probably right here at 290 if I can get it up there, 290, and then let the other one run to 296 as a profit target on Progressive. My other hedge play is an actual hedge. It's gold, which we just had news break yesterday. And take this with a grain of salt. Goldman Sachs raised their gold target for 2025 to $3,700. That would be about a 10, what is that, 10, 15% increase from here.
Yep.
So they say gold can run another 15% from here with that maximum target of 4,500, which would be about a 35% return from here. I've been telling you guys similar stuff all year long. Now I said take it with a grain of salt. A lot of times you'll find these analysts are late to their predictions. With that said, I do think we have a very, very bullish 2025 ahead of us because gold typically runs in 2 to 3 year cycles. And I tried to find the chart that showed this a little bit better, but this will do us justice for now. Look at this, 1972, 1973, and 1974. 3 years in a row, some of the best returns in gold. These are the annual return for gold that year. 49% in the first year, 73% in the next year, 64% in the third year. Insane numbers. Let's look at some other years that pair together. 1978, 1979, 2 year pair right there. 37%, right? And then 127%, which I don't think we'll see, but that just goes to show you that these bullish cycles for gold typically pair in multiple years. 2007, 2008 it was down, but 2009, 2010. So basic 3 out of 4 years in a row, 25%, 32%, 29%. 2024 was a 26% year, so it would not be shocking to me if we have a 20, 30, maybe even 40% year this year, but really probably in that 25% range. So I do think gold has more room to run, especially with the uncertainty right now with China dumping US bonds, and so on and so forth. I think we're going to see gold continue to rise. And actually, this was shocking. I saw this morning from Zero Hedge. If you go back to 2020, this is insane to
Wow.
me. Gold is now outperforming the S&P
Wow,
since the
that's crazy.
COVID bottoms. We all know how crazy bullish stocks. This blue line is the S&P. Look, it just launched into hyperspace. Gold was left in the dust, but now it's been sneaking back up, and now gold is actually outperforming the S&P since COVID. Did anyone know that? Did anyone even think that it was even close with how hard and how fast we saw stocks rally out of COVID? I didn't.
Dude, I've been talking about gold for the last year. I've been obsessed with it. And if you put a gun to my head, I would have got that wrong.
Yep. Yep. So I still think gold has room to run from here. I think we're gonna have a great year on gold. So that's my other hedge play for you. Lastly, here, earnings season is officially back. So mark your calendars. On Friday, we had some banks reporting. This week, we have airlines, banks, Netflix on Thursday, which will be the first kind of big one that we have. Progressive is on Wednesday morning before the open, but typically we don't see it move a ton on earnings. It's pretty dull on earnings, so I'm not too concerned about that with what I just stated on Progressive. But with that said, we do have earnings heating back up, which is crazy. I feel like we just got out of it. We didn't really get a break because it went from earnings season to tariff news. So now we're back to earnings season. We'll see. We'll see what the companies are projecting. I think Wall Street across the board is just expecting revisions to the downside. So I think we'll see some of that priced in. So I think this earnings season will be leaning more towards any sort of optimism or bullish news. We'll see those big excessive pops versus if Microsoft revises to the downside. I think everybody's sort of pricing that in already. Now, obviously, tomorrow I'll dive into more detail of what's going on, what's moving markets, sectors, seasonality trends, and all of that. But this is just kind of a quick flash roll update right now. Jeremy's asking, what does Apex say about Apple? That's a great question. With today's open, let's take a look, Jeremy. And let's go ahead and open the floor too. Anyone in the room, post questions. Again, we're doing Mondays, our kind of our on the fly day. We can wrap up, start the week. Let's take a look at things together. Apex currently does not have a buy signal on Apple, but given the rules, it is pretty close to one. If the news were positive this morning, I would have expected a buy signal this morning. With that said, not yet, Jeremy, but I wouldn't be shocked if we get one this week. Sorry, let me go ahead and move the chat back here. Are you taking the screen, Nate?
Sorry, I'm just jumping in so that I
Yeah,
can
you got it.
hammer through a few quick things. While I know people have some questions in there. If I can ever get my screen to go to the right size. Feel free to jump in the chat. Like Graham said, kind of free for all for you guys. I mean, Mondays obviously we're kind of reacting in real time, just like you are, seeing the market for only the last half hour. Obviously, having some idea of the weekend, but as Graham mentioned, I don't think we're going to be out of this environment where crazy news is coming out in the evenings, over the weekends. People are responding to it. All that kind of stuff, I think, is going to be very much the going into all of 2025. Now, I tend to think that a lot of the leaks and kind of the fake news are indications of what's actually going to be happening. And whether that's because Trump is trying to play 3D chess, or they're just disorganized, or somewhere in between, who the heck knows? But I do think that most of the things we get, kind of the fake pops, are at least seated in something real, like we saw on the pause, and hopefully like we're going to see in the semiconductors, because those can really give the market a nice momentum, kind of tailwind if we get those semiconductors rolling. Taking a look at how our sectors open, by the way, speaking of this morning, kind of interesting this morning, even with Apple and everything else rolling, we're actually still getting a lot of strength, is the financial and the staples, and then some health rolling up right now at the open, which kind of is not what I expected when I took a quick look at just what the sector strength was. And so I'm interested to see financials has a lot of earnings this week, to see how those are going to fare. But I'm starting to like, some of the sectors like health, like utilities, like financials and staples that have been really steady, I think are interesting for income opportunities. They've seemed to have kind of found their normalization. Those ATRs are starting to come back down in a lot of those stocks. And so I think they're great opportunities for income. Whereas you got the communications, you've got the discretionary, you've got the tech that are more your asymmetric, oversold, looking for bigger opportunities in those. By the way, one other thing I want to mention, I'm going to keep hitting you over the head with this. Insider buying is not picked up yet. We are still not seeing insider buying really step back in. This is the CEOs, the CFOs jumping back in and buying large quantities of their stocks. So they're still waiting. I'm sure they want to see how the tariff stuff shakes out. I'm sure they want to see what the ultimate tax policies are going to be. And so they're still on the sidelines. And until they really step back in, I think it's going to be hard to find a definitive floor. Now, that doesn't mean the market's going to necessarily keep going down, but I think it's going to be hard to find a strong floor, because every news announcement and anything tariff related, whatever else, is going to shake the market around, because we don't have major liquidity stepping back into the market. And remember, like 2020 and other previous, really aggressively flushed markets, we had trillions of printed dollars move into the market and gave us just a run of liquidity. It was not an economic run, it was a liquidity run. And so we need the liquidity back in the market. What do I mean by that? Literally buying. We need people to buy lots of stocks. That's what we need for the market to really get ripping. In 2020, that happened through printed money. We're not going to get that level this time around. So in my mind, we're waiting for one of two things: either the institutions and the people who've had cash on the sidelines to jump back into the market and buy, but really, and we do need tax cuts and other things to come into effect, where we get a rotation of capital that comes from the middle class and the upper class to reinvest their money back in the market. Again, liquidity, buying the market up. And so until we start seeing this pick back up, I mentioned, the ultimate sign of a bottom of the market. It happened in the 70s. It happened in 2000, happened in 2008, happened in 2020, also happened in 2018, by the way, on that big flush, is when retail is very bearish and then insiders and corporations start buying. That kind of X factor is normally where you get the strongest bottom and the biggest rallies. And so we haven't quite seen that, which means we're still in shaky ground, if you ask me. Now, we are seeing some interesting buying on bonds actually picking up for the last week. So I have some bond positions, kind of an asymmetric play that I think, is a coin flip, whether we actually get a real fall through. But interesting to note that if you take just last week's kind of dark pool buying, this is the buying that's hidden, kind of off exchanges where they don't want to show their cards. We're seeing $9 billion in HYG, $6 billion in IEF, $5 billion LQD, another $4.5 billion BIL, $3.3 billion SPTI, another $2.27 billion in TLT. Those are all bond plays that stack up to like almost $30 billion in bonds that are being bought in the dark pool. So they're starting to think, hey, there's going to be a flip here, where whether it's because they believe that we're actually going to get better rates, whether they believe that Operation Doge and kind of having a surplus and making the U.S. market more attractive, whatever's going on there, we're starting to see a big tick up in the amount of bond buying just in the last few weeks. Earnings ahead, like Graham mentioned. I think that the folks that have earnings earlier in the season are going to have an advantage. They're going to be the ones who can kind of hit some of those buzzwords like, tariffs aren't going to help or aren't going to affect us. And, we're in good position. And they're going to be able to use some of that language that's probably going to become a buzzword this season before it falls on deaf ears. So I'm very interested to see. We had MT and Goldman Sachs go this morning, both a little bit positive. I think they were both up about 1.5%. This morning. So nothing crazy there. Usually you're not going to get crazy reactions to the financial sectors. I mean, Goldman Sachs and Bancorp and Citi and Visa, like they're not usually going to be 20% moves. But I'm just interested to see how directly do these companies on the earnings calls, take on tariffs. This is not going to affect us. We're well positioned, that kind of thing. And then, as Graham said, I think probably even more importantly is going to be the future guidance. Everyone's expecting future guidance for 2025 to be very negative. I think that's already started to be priced in. And so what is the reaction there? Do you see that it's so overly negatively expected that when, a company just kind of holds serve and has very mediocre guidance, that it's actually a net positive return and people start buying up? Or do you see people just looking for every reason to sell, and anything that's not a phenomenal earnings report is going to get beat to the ground? I think these early earnings will give us an indication. I think Netflix is a super interesting one. They've been just an earnings, hilarious reaction from mediocre earnings that are up 20% to great earnings that get beaten down, and everything in between. So I'll be keeping an eye on them. And then, like I said, a lot of the financials should just give you more of a baseline. Nothing, you shouldn't see crazy reactions there. Weekly watch list for me. I'll throw this one in the chat for y'all. Mostly bullish here until we hit that April 2nd gap that I thought we might get to last week, which we didn't because we had that big sell-off day in between on Thursday. I think we should hopefully hit that April 2nd gap this week. And so I'm bullish in the short term. And then I think, we could definitely get a sell-off from there. But if we get continued momentum, I'll stay bullish. Apple, I like to the 220 gap. AVGO, I like to a $200 target. Now, obviously, if we get, tariff news, hey, actually semiconductors are going to be higher tariffs, then, we're going to see tech and everything in general take a hit. But assuming that the news is actually more net positive and we got a leak of that positive news, I like AVGO. Walmart, I like the $95 target that I shared a couple weeks ago when it was really beaten down. We're almost already there right now, so not a ton of meat left on the bone for Walmart. I mentioned health, LLY. I think starting to kind of lead that recovery. Health is having a more aggressive bounce back. $785 target. Gold dipping back down today. Every time gold dips, I'm buying it. If it hits $3,200, I'm definitely buying it. So I like that. MSTR, I think maybe coming back to life a little bit here with some of the Bitcoin resiliency. MSTR has had, let me see if I can show you real quick. Yep, here it is. Been beaten down, was all the way up here at 550 post. That's the post split pricing. I don't know. I don't remember what the exact pricing was there, like $2,700 or whatever. But this is the post split pricing, and it's been grinding. So we could see a pop here and kind of a breakup of this downtrend. And if it gets rolling, I mean, this could just be one of those asymmetric risk reward opportunities. Certainly high risk. I mean, don't get me wrong. MSTR is about a high risk place you're going to get in the market. But if it breaks maybe this high here, let's call it, just to give us a nice whole number, 345, 350, you could play that all the way up to 500 and hope that Bitcoin hits a cycle here that goes into the summertime. So interesting play to see MSTR kind of come back to life here with the Bitcoin resiliency. And if you're looking for a high risk reward, I think MSTR is an interesting play every time Bitcoin gets rolling. And then lastly, TLT, I have the January 2027 call. So obviously way out there looking, can we get the balance sheet cleaned up? Can we get bond interest rolling in the second half of 2025, early in 2026? The cool thing about trading TLT is that the expected move is quite low. So if you do get a crazy, kind of generational run on bonds where they move 80% or 150%, the expected move is so small that an 80% run in TLT is going to return, massive ROI on the option side compared to something like MSTR where you kind of have an asymmetric move already expected just in the price of the premium. So those are my watch list items for this week, including a couple longer term ones there, like the bottom three here, which are certainly more longer term in nature. Quick reminder, I'm going to mention this pretty much every time. If you're a member of mine, you can email me directly. Just check your email for my personal email that you can send. Make sure you're in my Telegram and Grams as well. And then we have that stock of the day that I send out. So as long as your phone number is in that free stock of the day list of mine, you'll get my number one ticker each day texted directly to you. Now, the one thing before, I think Graham has a couple more notes here before I flip back that I want to mention. Actually, I think this probably ties in pretty well to a couple of things he's been talking about. Right now, I am kind of cautiously optimistic for the short term. As I mentioned, kind of a continuation. I am total coin flip in the medium, and then I'm still bullish on the long term. And that medium term, I think, is where there's the most noise, the most chaos. Really hard, in my opinion, to buy options for the medium term right now because you're buying them at this huge volatility premium. Assumably, that premium is going to fall off. The ATR, meaning the average range, how much the market actually moves, is almost certainly going to come down in the medium term. And so if you're trying to make those medium term trades, you have to get the direction and the timing exactly right. And if you listen to me and pretty much anything I say, I'm going to tell you that's the hardest part of trading. And frankly, I don't even recommend it because I think it's brutally challenging, and trading regular options in that environment is super difficult. So what I think the better play is, especially while volatility is high, is to try to look for the opportunities that you can get in where you're not necessarily predicting big directional moves and getting your timing right, but you're actually letting the market pay you by being kind of in a more conservative movement. For example, take a trade like we did on Tesla, where we got in below price and we just say, hey, listen, if we get a pop, we're going to be in good position. Even if the market grinds sideways, we're going to be in good position. And if the market ends up kind of fading away in terms of movement, that those premiums are actually going to pay us instead of us paying the dear price of holding those options. And so for me, that's really the market that we're in right now. There's so many good opportunities right now that don't actually require you to predict big, perfect timing directional moves. You actually just get in a comfortable portion of the market where you can get paid for the market just to slow down and actually end up, even if it does whipsaw back and forth, not end up at the end of the day doing a whole lot. And so for me, those are the opportunities I'm looking at. Try to take advantage of the insane volatility where you don't actually have to predict anything or where the market's going to finish, and take advantage of, just getting into a comfortable spot in the market where it can just not crush you and you can actually make a whole bunch of money because the premiums are so high. And I think, Graham, I think a lot of what you're going to end up talking with Chuck about today is kind of in that vein, not predicting big direction moves, just taking advantage of getting in to the best opportunity that requires the market to do very little, and you get paid quite handsomely for it doing really nothing.
Yeah, definitely. And that's something that we've talked about for a while here. Now, what's going to be super special about that class with Chuck today is when we do these classes, a lot of times you guys see me flipping through options and, that's a good one. It's not a good one. Oh, let's look at this one. Let's test this one. And it's a lot of manual labor going through all of the options chains, all the different strike prices, trying to find a good entry. What we're going to show you today is actually a pretty cool thing, Nate. Instead of manually having to do it, spend an hour each day looking and hoping for the best. We've actually automated it. So it's going out each day and sourcing these exact options for us, the high paying options where we have a lot of downside protection. Stocks can fall 10%, 15%, and still pay us a good 20, 30% income payout on them. And again, we're not going through and flipping through options ourselves. We built the system thanks to the technology of today that it goes through and runs through all the options automatically and spits out the best ones for you.
Yeah, I mean, people who follow me and watch me trade know that that's probably what I spend the most time doing. So obviously, I build some watch lists and I like to look at stocks, but literally, what I spend the most time doing, if you guys follow me in my sessions, is how do I find an option that gives me the right risk to reward, pays me enough juice, but also is in a good enough position to kind of protect me from the market? Because finding that balance is where I personally think the best trades are made. For example, we talked about this in last week. You guys want to try to nail the perfect timing and prediction on Apple tomorrow and make, an 80% return in an option that costs 5 grand? Or would you rather say, hey, as long as Apple doesn't fall a certain amount in the next 2 weeks and for, 1/10 the cost, make a 40% return? Like, I think those risk reward scenarios are where people get the single biggest advantage in the stock market. So you showed me a couple screenshots, and I think, like, I mean, I don't want to give anything away, but like the kind of the lasting question I have for you is, does it really do that, or is that like a demo of an ideal scenario? Like, does it really just say, hey, Nate, if you want the best opportunity in the entire option market today, here's what it looks like?
Yep. All done on a and it doesn't, it's not like it's saying Nvidia is the best stock to trade. It's saying Nvidia is the best stock to trade. Here's the options to trade. Here's the entry price you should pay. Here's a profit target that you can set. And then also, Nate, it just shows you a screenshot just to prove to you just how far a stock could fall and still pay you. Does it
Yeah,
all automated. Pretty sweet.
that's
All on
because
the
that's
silver
the
platter.
crazy. You sent me that screenshot. I didn't know if that was like an idyllic example of what could happen, or if that's like actually what the tool does.
No, and if you look behind the door, the closed doors of it, you can actually pull up like say Nvidia, and it literally has just hundreds of screenshots of every option tested individually, and then it just ranks them all and gives you the best one
Oh, that's
with the
crazy.
best premiums, best liquidity, and then also it has to show that it's going to be able to pay out even if a stock falls 10%. So it's really
Wow.
really cool.
Because yeah, I mean, like I said, I spend so much of my time doing that because that's what I believe in. I believe that most traders lose because they're trying to predict stocks, and that's just such a challenging game. You have to get the timing right. Then they're trading, kind of the regular calls and put world where you're paying so much premium, and to be right at such a high level to make a return. Whereas as soon as you learn how to kind of flip options and use them to your advantage, then it literally just becomes, okay, how do I find the right one at the right place on the right stock that pays me the best, given all the different scenarios? And if you can do that in some automated way, I mean, that's insane. Like, you're going to have
Yeah.
opportunities that not only would it take a lot of work to find, but let's be honest, most times you would never find them, right? Because you can only look through so many option chains in a day to try to find the best opportunities.
And a lot of times we're limiting ourselves. I do. I mean, I'm only one person. I only watch a handful of stocks each day.
Right. Right.
We're gonna make some trades here in just a moment, guys, on stocks that I've never traded before. I've never traded ED before. We're gonna trade it today here in just a moment. But this is something that AutoStrike, what Chuck and I built together, it goes and sources it all for you, so you don't have to look at the charts. You don't have to dig through the options change. You don't have to look. There's 20 tickers here today on Newton. Imagine how long it would take for me to go through the options of each one. By the time I found one, the markets are probably closed for the day. So
Yeah, especially because you want to compare, well, what if I hold it for 2 weeks and I give it a chance to drop versus what if I hold it for 4 weeks? You want to include timing, which means looking at different expirations, like the amount of legwork. And again, I do this myself, so I know what this looks like. But that's kind of what's required if you want to set yourself up with the right trade. So I'm super pumped about this. I mean, you had hinted about it earlier and sent me a couple of screenshots, and I basically said this can't be real. Was my first thought, and so I'm pretty pumped to see it in real time.
yeah, and guys, I posted that link in the chat. Chuck and I are going to demo it for you today. Now, I have to let you know because it is new. We want to just make sure that it's working at an excellent, optimal pace for everyone. We're only letting 199 people access it. So I posted that link in the chat to join us at 1 p.m. today, where you can see it for yourself, see how it works. And then if you want to be one of those 199 folks to access it, we'll show you how to do that at 1 p.m. But first, everybody open up that chat here. Click that link in the chat. I sent it at 10:31 a.m. Looking for 199 folks to give this a shot. Click that link, sign up, and join at 1 p.m. Now, I'm going to keep moving here. I want to talk about a few stocks that I like, stocks that we have been talking about in the opening playbook for over the last week at least. Remember this one, RSG, guys? Does everyone here remember RSG? Republic Services. Does anyone know what this company does? Anyone ever, actually today was recycling day for me. Did anyone ever put their trash can out on the road and see Republic Services on it? They're a trash company. This stock is anything but a trash stock, though. I'll tell you that because it's been just an amazing bullish trend. If we look here, it's an industrial stock. It's been holding up really well. Just a good company. Long term, been a very, very strong company as well. And look at this popping up on Newton again today. We had a trade opportunity on it the other day. popping up on Newton again today. Look at that. Look how, I mean, compare here. Let's look at the QQQ and see how it's fallen off, right? And even the snapback today, it's not anywhere near all-time highs, let alone even the 200-day moving average. RSG here is back on Newton, increased momentum. Now they do have earnings coming up here on the 24th. So if you're going to trade it, use the expiration for this week if you're going to wrap it, or just in my opinion, just close it before earnings. But it only, guys, look at this. It's only a 2% implied move. It's not a stock that's going to boom or bust on earnings. The implied volatility, let's see what the May ones look like. Very low. So you can probably scratch everything I just said about avoiding earnings. You can probably trade this one through earnings. I mean, look at that. The IV on it is less than 30% going into earnings. Pretty crazy. With that said, looks really good. I really like it. I'll leave you guys to this one to trade it on your own. If you like it, I'll just post a ticker in the chat, RSG. Another one that popped up on Newton today is GEV, which is the one I just talked about. Now, typically, this isn't one that I would look to trade actively right now because it is in a downtrend, right? We want to see it close and hold above the 50-day moving average. But it is cool to see that the momentum is flipping back green. We'll see if it sticks. Last time it fizzled out, right? So last time it just kind of chopped around sideways and then flipped down lower. But previously, you can see here just how big these bullish runs have been when the momentum does flip green. So here's back in August. I mean, this was a long 3-month run. And in GEV, stock doubled during that time. Next one was here in January. Another big move. So again, I want to see it close above the 50-day moving average, but definitely make sure GEV is on your watch list. I'm invested in the long term in the stock. I'm not selling that. But if you want to trade it actively, let's see if it closes above the 50-day moving average, and then maybe enter tomorrow, or give it some time to just kind of see where it goes from here. Another one is Costco. Very similar situation. Costco is a great strong stock. Typically, even this should do well, and it should hold up better than a lot of stocks in a recession because everybody still has to go get their groceries. Everybody likes the discount stores. Costco, even though I somehow always leave with the $600 bill, supposedly saves me money, and everything's cheaper there. Same thing though. Newton flipped green. That's a good positive sign for us. However, I want to see this close above the 50-day moving average, which right now that's 983.66 on Costco. So we're really close to that, but make sure you have Costco on your watch list. Again, my key signal here, Newton just flipped green. That is a good entry point. I would also like a double confirmation by having it close above the 50-day moving average. The reason is you'll sometimes see these tests off of it. So let's look back at December. Costco came down below it, came up. Might have looked good, but it pinged off the 50-day. Pinged off the 50-day, and then closed above it and went higher from there. So that's just a very simple filter that you can use to help validate some of your trades. Now, for a stock that I do like today, and I do want to trade with you guys, ED. Again, this is a stock I've never traded before, I don't think. It's a utility stock. We like utilities. It's been one of the top ranked sectors over the last 3, 4, maybe 5 weeks in our opening playbook sessions. Again, if you don't know what I'm talking about, show up tomorrow at 10 a.m. I walk you through the sectors step by step every single week. So ED, good, strong utility stock. Utilities are strong. Look at this bullish cross right here of the 50-day moving average moving above the 200-day. They do have earnings coming up next month. However, this looks like a great breakout trade with a target probably right here, at least at 114, high-end range of 115 here. Now, the earnings similar to Republic Services, it's not a big market maker move. Don't expect to be paying a ton of implied volatility. Premiums are still really cheap. So if you want to trade ED and you want to just trade the calls, I would look for a quick move here, 1 week hold time max on ED, and I'm going to type this up for you. But I would use the May options because they don't have weekly options. So use the May options here, and I would do the 110 call personally, just because it's going to have a little bit more, a little less extrinsic value in it than the 115's all extrinsic value. But let's see here. I'm going to type this up for you. I'll give you both. Ticker is ED, 16 May 25 expiration. Buy the 110 call would be one way to trade it. That's going to be about $4.30 to enter. 430. If you want to get a little bit more risky, a little bit more speculative, just do the one. Did I type 100 call? Ignore that typo. Let me see if I can delete that. Okay, cool. Let me retype this. 110 call. I apologize. That was a typo there. So it's going to be your safer play on ED. Your more speculative play would be a 115 call. And I'm going to show you something cool here. Let me just make a note here. More speculative which means we're really going to need it to move. But if we look here, let me go ahead and pull this up. So there's a thing in Thinkorswim called Theo price, which just stands for theoretical price, which basically is a calculator for us that says if a stock gets to X price by Y date, what should the options be worth? So we said we want to see ED up to 115. We'll call it 114 just to be safe by 424, 425 range. We'll give it 425 just to be a little bit. So see where my crosshairs are there. If it keeps trending higher, I think it can get there quicker. I think we could see it by this Friday. But let's just give it some time and just see what the options look like. So again, right now, the 110 call is trading for 430, 115, and I get that number by averaging these numbers, or you can click here and see the mid. The 115 is trading for 160, 165. Now, I punched in this Theo price guy. Does everyone see what I did here? Came here, Theo price. And then right here is where I'm going to be able to use my calculator. And we said 425. We think ED will be at 114. So I'll just leave it 114.31 for simplicity's sake. Just say it moves $3 from here. This Theo price is going to tell us what our options will be worth. So if you did the 110 call, that should be up to 567. So 440, sell 567. That's a $1.20 on that move, about 25%. The 115 call would go from 160 to 222. Did everyone see how that worked? I know I moved kind of fast here. How the Theo price work. I just want to show you this feature in Thinkorswim. So when you put a plan together, you can see how it works. Now, if it happens sooner, right? If it happens this week, I got some questions here. Do it one more time. So I'm just going to open this back up to what it might look like in your options chain. Oops, let me just close these out. All right. So say you come here first, you type in ticker ED. We're going to trade it here in Thinkorswim. We're just going to pull up our options chain. So let me pull up May 16th expiration. All of the options, I'll tighten this up just to make it a little bit easier to see. Right, here's all of our strikes. Calls are on this side. Current prices. Now right here, does everyone see this button in their Thinkorswim account? That's where you can flip down here, and if you click Theo price, your calculator is going to pop up. I'll give you guys a minute to pop up that calculator there. Test, would the Theo price calculation work the same as the option calculator website? No, this is different. This is going to give us a better idea of what calls or puts should be priced at given a move in the stock that you type in. So let's go ahead, click here. You set your date. I went ahead and said, let's say by next Friday, it's up to all-time highs, or the most recent highs at least. And then in this column here, Theo price, it's going to show you what that options price may be. So you can look at what the current price is. What did I just click? Here you go. 440 should be at 575 if we're right. Now, I give you guys two different call options there. But if you want to trade the wrap order, this is going to be a little bit more. We can't do it, actually. Too wide of strikes. You guys know this from the rules. $5 strike, $100 stock, can't do it. Now, this is just what Nate and I were talking about. Here I am. I found a great stock. I really want to trade it. I want to trade the weekly wrap order. Problem is, I just spent all this time researching the stock. Strikes don't match up. Can't do it. That's why what Chuck and I are going to show you today is going to be so special because it takes all of this, kind of head-banging gruel work out of it, where it just goes through stocks like ED, FICO, Fast, Hub, all in the split second and pulls the options for you and then finds the best ones. Saves you a lot of time there. So that's really, really cool. Make sure to pay attention to that today at 1 p.m. There was another stock I liked. CNP looks really good. This is a cheaper stock. Earnings coming up on the 24th. But again, there's not even a market maker move rated in here right now. If I were to trade this, I would look to the 16th of May. This is also a utility stock, I believe. Let me double check that. Yep, a utility stock. Very good sector. Strong trend here. Pushing higher. Again, I would look to sell this right before earnings just because I'm not sure what the move should be. But it does look like it hardly moved on the last earnings. Hardly moved on the previous earnings. So it's probably not a stock. There's a little bit more of a move. Doesn't look like it normally moves on earnings. The implied volatility is below 30%, very cheap. So you could hold this through earnings. Let me go ahead and type this up for you guys. I would just buy a little bit more time here than just this week. If I were to trade this, where'd my notes go? There we go. Ticker is CNP. Oh, and I should show you guys exactly why I picked it. Not only is it a great stock, but the Newton flipped bullish today. Last time that happened was here. Stock ended up going here. Last time it happened was here. Stock ended up going here. So typically we get a nice bullish uptrend here. Now, if you guys have Newton, a couple ways you can trade it. You can trade it until the stock flips back red, or you can take profits at a yellow. Or if you see this, this is kind of how I like to do my swing trades, especially in stocks I don't want to necessarily hold long term, is when we start to get the drop in momentum, just take your profits there. So CNP, I'll type it up for you here. It's May 16th call, not May 10. But here we go. 16th of May, expiration. I would buy the 36 strike call that is currently trading at, here you go. 36 call, currently trading at 190. It's one strike in the money. You can go one strike out of the money if you want to, trading at 128. Let me just do that Theo price again. So I'm going to flip here to Theo price. I'm going to look at a chart here and just kind of gauge 37.7 by 423. I'll call it because I'll just take profits before earnings. So our Theo price here will show us that right now we can enter this call for 190 and it should be worth about 242 by that date. So if you just want to do the math real quick, 2.42 divided by 190. It's about a 12% gain. That's really not much. I'm going to give you guys a wrap order too because this is pitiful. On the 37 strike call, trading at 128, 167 would be the goal. About 30% there on that move. However, let me just flip this back so I can see the volume. All right, it should be fine. This stock is moved too much. There's no way this will fill. Again, same problem I was just talking about. Here I found a great stock. I want to trade the options, but I don't know if we'll be able to get a wrap order on it this week. That's already priced in. Let's see what we get here. All right, we could do this and see if it fills. This would be a longer hold time here. CNP is our stock. It would be about a 4-week hold time. This is going to be one of my wrap orders. Just set a limit order because it's going to be a little bit wider bid-ask spread, but there's tons of open interest here, which is very bullish for us actually, but it's also going to provide liquidity. So I'm going to buy the 36 strike call and I'm going to sell the 38 strike call for the May expiration. Pay no more than $1 debit. Someone correct me if I have a typo here. But this will allow you to trade this stock. And if by May 16th it gets above here where my crosshairs are, it'll pay you about 100% return on investment. If you want to be more safe, just shift it in the money. You're going to get less ROI, but it'll make it so if it's flat. Let's see what the prices are. Actually, that's really good. You could do this too. If you can get filled at 50 cents, this is a steal right now. Let me just see. Oh my gosh, it just filled right away. All right, scratch that first one I sent. Do this one. This is a steal of a deal right now. Basically, what this is saying, if CNP doesn't even move, it has to close above 37, which it's at right now, you can make it double on your money. So we've got a nice little buffer room here. Let's take my stake up to 500 bucks if it will. I'll just let it sit. But that would be a great deal. So either of these can play. Obviously, the 36, 37 is going to be a little bit better risk to reward because instead of needing it above 38 to double our money, we only need it above 37 to double our money. But those are my two trades for you guys today. Again, on the watch list, we still have GEV, right? We have Costco and RSG. Those are the stocks I really like right now, in addition to what I just gave you for trades. And that's just for your more active approach this week. Long term, I gave you the stocks I like as well. But for the more active trades this week, RSG, GEV, Costco. Actually, probably don't do GEV, but RSG, Costco, CNP, and ED. I'll just type it here again because I just rattled off a lot. Those are my more active trades I like right now. I just posted in the chat. Now, again, I'm going to post this one more time, but we just went through a lot of manual labor to get those trades. We only looked at a few stocks. We didn't even have time to look at all of these different stocks. Look, I mean, EXC looks really good. McKesson looks really good. We didn't even have time to look at these stocks. But today at 1 p.m., I'm going to show you how you don't need the time to, because there's a cool little tool. I don't think I've ever seen anything like it before. We've never published anything like it before. We finally finish it up, where it does all of this for you. It's nuts. You don't have to, it doesn't give you the ticker and then you pick the options. It gives you the ticker, the exact options, the exact entry price, the exact profit. It also gives you the profitability schedule so you can see for yourself. Like, for example, I'm just going to, give you a theoretical example here. If it was given an entry on Costco today, based on the options it would select, you could have Costco fall, as long as Costco, actually, let me just zoom out again, didn't go below here. So look, you'll get like all of this buffer room that you see there. If it doesn't do that, you get like 20, 30, 40% on investment. That's what it's designed to find. Really safe income plays with very high ROI. So typically, if you're doing like a credit spread down there, you're going to get 5, 6, 7% maybe on your investment. This is finding the ones that pay 20, 30%. So like, if you invest in $1,000, you're looking at 200, $300. If you're investing 5 grand, you're looking at like $1,500 for a stock, a good, strong stock, basically just not to absolutely tank. Which, again, the beautiful thing right now about that is we're already trading with so much downside already priced in. Stocks are only going to go so low. So right now, I think we have a really cool opportunity to take advantage of this. Again, that link is in the chat there for our 1 p.m. session. It'll be free for everyone to show up. I expect we'll have about 1,000 people there today. However, we're only going to give access to the tool to 199 people today to get them up and running with it. So it'll be awesome. Exactly, Barbara. Mike, is
Well,
there
dude,
still talk of Costco splitting? There's always talk of it. I haven't heard of anything, but it'd be great.
I can't wait for the 1 p.m. because obviously, like, it's right up my alley in terms of finding opportunities in the way that I think, you can take advantage of the stock market most. But even just that example there of all that work you found, then you looked it up, you did all that effort, and it was like a 10% return, compared to, hey, let us find you a better opportunity with much higher probability and juice the ROI as much as we can, scanning through, millions of contracts that you and I could never get through in a day. So can't wait to see it in real time. And do I count as one of the 199, or do I get behind the scenes access?
You
How does
you
how
don't
does this
count.
work?
Nate,
Okay.
you get whatever you want, of
All
course.
right.
We
Well,
all
I'm just
come to
making
show
sure.
up and give you whatever you want, Nate.
I'm just
Guys,
making
post
sure.
in the chat. Give me a yes if I'll see you there today at 1 p.m. I hope to see everyone in this room there again. I expect we'll probably have about 1,000 people in the room. It should be a lot of fun. Awesome. A lot of yeses.
Yes, for
Um,
me too.
yes for Nate. There you go, guys. And it'll be with Chuck. We haven't had Chuck around in a while, but he's got quite the track record. He was one of my mentors when I was first starting out, helped me really grow my account, really opened my eyes to different ways to trade. Um, and actually, Nate, he just finished his 2024 audit. He's officially 25 years in a row in his advisory services with not a single down year on record across the board. Now, there were some years where the profits weren't as big, but it's
Yeah.
pretty impressive considering there's many market corrections during that time.
Yeah, he's incredible. And I mean, the new thing is also just like unlike anything I've ever seen, because obviously, we know Chuck as a great stock picker, as a guy who's really consistent, as, having the ability to trade in different ways and all of that. But I didn't exactly peg him as the guy who would crack this code. And then when he showed it to me, I was like, oh my goodness. So
Yeah.
I'm pretty excited about it.
Yeah. Well, it'll be awesome, guys. We'll see you there at 1 p.m. Eastern. Again, there'll probably be about 1,000 people, but only the first 200, 199 are going to get access. So make sure to show up, pay attention, see if it's for you. I hope it is. I'm going to be using it. Hope you will be too. But thank you all for showing up to the show today. Again, we will be back here tomorrow, 10 a.m., Tuesday, 10 a.m. We're doing it every day at 10 a.m. Eastern. Live trade analysis, live trading. Every day is going to be something a little bit different than the last. So I hope to see you all at 1 p.m. Eastern today and then every day this week at 10 a.m. See you guys.
All right. Bye, everyone.